Hello, this is Rena. Thank you for visiting the Book Summary Library again today. The theme this time is Dhandho Investment Method. This may be a word that you are not familiar with. But don't worry, today I will explain its meaning in an easy-to-understand way and in a form that will be useful to you in your daily life. The word Dhandho means business in Gujarati, India. Investment methods based on this are known as a way to aim for the largest possible return with as little risk as possible. Simply put, it is an investment idea that realizes big wins and small losses. For example, what if you invested 100 yen and there was a game where you could win 1000 yen if you won and only lose 10 yen if you lost? Finding such asymmetric bets is the essence of this investment method. Isn't this interesting? And above all, it's not scary. When you learn about such an investment idea, it gives you a little courage. In today's talk, we will look at the background of the birth of this Dhandho investment method, actual success stories, and how we can apply it to our daily lives. It may be complicated, but Lena will give you a fun explanation with concrete examples, so please relax and listen. 1. Background and origins of the Dhandho investment method. So, let's explore together the background of the Dhandho investment method. At the root of this idea is the success story of the Indian Patel family. To Lena, this story is as dramatic as a movie. So, let me tell you more about the story. The Patel family is from Gujarat, India, and was an immigrant who moved to the United States from Uganda. At the time, they had lost almost all their assets and started from scratch in a new country. That's like suddenly moving to an unfamiliar place with no home or money and being told, "Come on, do your best." Normally, you would be scared and unable to do anything, but the Patel family was different. The opportunity they found was the motel industry. In the 1970s, the United States was in an economic recession and the price of motels had dropped significantly. One of the Patels, who saw this situation, thought, "This is a chance," and decided to buy a small motel with his family. However, when an ordinary person thinks, "Let's buy a motel," don't you think it would cost tens of millions of yen? In the case of the Patel family, they bought a 20-room motel with a down payment of only $5,000. Moreover, they even borrowed money to pay for it. So how did they run it? This is where their ingenuity shines. They didn't hire any employees, and the whole family was in charge of running it. They did everything by themselves: cleaning, reception, and repairs. Furthermore, by living in the motel, they saved on rent and transportation costs, and managed to get by with the bare minimum of living expenses. This is like turning your house into a small shared house and renting out the spare rooms while living there yourself. By thoroughly cutting down on unnecessary costs, they succeeded in maximizing profits. As a result, they succeeded in making a profit of $15,000 in 1 year from their initial investment of only $5,000. This investment had a return of 400% of the original investment. Using this success, they bought even bigger motels, eventually controlling more than half of the entire motel industry in the United States. Can you believe it? In just a few decades, an immigrant family dominated the industry. Success stories like this are the basis of the Dhandho investment method. It shows how real and effective the idea of minimizing risk and maximizing profit is. And this method has many applications in our daily lives. 2. Basic principles of the Dhandho investment method and its application to everyday life. Now, the Dhandho investment method, which was born from the success story of the Patel family, has several basic principles. By learning these principles, you may find hints that can be used not only in your investments and business, but also in your everyday decisions. Don't think too hard about it, let's have fun learning with Lena. First of all, the most important idea of the Dhandho investment method is, win big, lose small. The key is to thoroughly follow this simple rule. For example, imagine the following scene. Imagine you find a new lottery ticket at a convenience store. The lottery ticket costs just 100 yen, and if you win, you have the chance to win 10 million yen. But if you lose, you only lose 100 yen. In this case, many people would think, maybe I should give it a try. This is exactly the Dhandho way of thinking. 1. Utilize existing things. In Dhandho, it is considered less risky to use something that already exists than to create something new from scratch. One example is when the Patel family bought an existing motel instead of building one from scratch. Similar things can be said in everyday life. For example, when you want to open a store, you may have a higher success rate if you research products that are selling in your neighborhood, arrange them, and sell them in your own way, rather than coming up with a completely new concept. 2. Pursue simplicity. Mohnish Pabrai says, you should choose an industry that changes little. For example, mineral water and carbonated water, which are staples of the beverage industry, have a stable demand even as times change. On the other hand, products that are at the forefront of technology are always new and competitive. What about in everyday life? For example, when buying home appliances, there are times when you feel more comfortable choosing a simple, stable, and well-reputed model rather than choosing the latest, high-performance refrigerator. 3. Finding bargains. At Dhandho, it is also fundamental to target assets that are valuable but undervalued in the market. For example, have you ever found a high-quality piece of clothing at a bargain sale that is surprisingly cheap? Products that make you think, is this really worth it, are the smartest purchases in the Dhandho way. 4. Making bets that you can afford to lose. Minimizing risk is the key to the Dhandho investment method. For example, when you want to start a side job, instead of putting all your money into it, try starting with just a portion of your monthly budget at first. That way, even if it doesn't work out, you won't have any trouble making a living. When Mohnish himself started his first business, he approached it with the mindset that, if I fail, I can just go back to my normal job. This is also the secret to reducing the mental burden and continuing to challenge yourself until you succeed. 5. Don't be afraid to copy. It's easy to think, I have to create something new, but Dhandho's philosophy recommends copying successful people. This is similar to cooking recipes, isn't it? Copy a menu that was popular with your family and friends and incorporate it into your own recipes. It is easier to succeed with fewer failures than trying something new from scratch. Knowing these principles will help you find ideas that are useful not only for investment, but also for everyday life and work. It is important to have the ability to determine where you can get a big return while minimizing risk. This is the key to living the Dhandho way of life. 2. Basic principles of the Dhandho investment method and its application to everyday life. Now, I will talk about the basic principles of the Dhandho investment method, which was established based on the success of the Patel family. These principles are full of wisdom that can be applied not only to investment and business, but also to everyday life. Lena will explain it clearly and carefully, so please relax and listen. First of all, the most important thing about this investment method is the idea of winning big, losing small. By following this thoroughly, you can aim for long-term success without taking big risks. For example, let's say you find a lottery ticket that you can buy for 500 yen. If you win, you will win 5 million yen, and if you lose, you will only lose that 500 yen. Finding such asymmetric opportunities is the Dhandho approach. First, it is important to make use of existing things. It is safer and easier to succeed if you make good use of what already exists than to start a new business from scratch. For example, the Patel family chose to buy an existing motel rather than building a new hotel. This idea can also be useful in everyday life. For example, if you want to start a cafe, it may be less risky to study popular dishes and drinks and arrange them in your own way than to create a completely original menu. Secondly, it is also important to pursue simplicity. Mohnish Pabrai suggests that you should choose an industry that changes little. For example, demand for products such as mineral water and soap remains stable even with changing times. To apply this to everyday life, for example, when choosing a smartphone, there may be times when you feel more comfortable choosing a simple model that can be used for a long time rather than a model packed with the latest features. Furthermore, developing an eye for finding bargains is also a basic part of Dhandho. This is a way of thinking that emphasizes, can you get the same value for less? Have you ever found a product on sale that was surprisingly cheap but good quality? That sense of bargain is a Dhandho-like choice. Next, the key is to manage risk so that even if you lose, you won't suffer too much damage. When starting a side business, it is recommended that you start with a spare capital rather than putting all your assets into it. Even if you fail, it will not affect your life and you will be able to try again. When Mohnish himself started his first business, he approached it with the mindset that, if I fail, I can just go back to work as usual. This mental freedom creates the energy to continue trying. Finally, it is important not to be obsessed with creating something new, but to not be afraid to imitate successful examples. For example, you can slightly adapt the menu of a popular bakery and incorporate it into your own store. This reduces risk compared to thinking from scratch. Reena also sympathizes with this idea. Imitating is not a bad thing, but rather a smart choice. These principles are full of hints that can be used not only in investment, but also in everyday life and work. By adopting the Dhandho approach, you will be able to see the best choice for you while reducing risk. 3. Practical application of the Dhandho investment method and concrete examples. So far, we have talked about the basic principles of the Dhandho investment method, but next we will delve into how to put it into practice with concrete examples. If you are thinking, Reena, can I do this too? Don't worry. In fact, the Dhandho approach can be applied to small daily choices. Let's take a look together. First, let's apply the principle of using existing things to everyday life. For example, let's say you want to start a home vegetable garden. You can start by buying seeds and tilling the soil, but you can also buy healthy seedlings at a local flea market and start from where they are already growing. In this case, you can reduce the effort and time while reducing the risk to harvest. It's a very Dhandho-like approach. Next, let's think about pursuing simplicity. This is the idea of focusing on stable areas rather than areas that are rapidly changing. For example, instead of constantly replacing the latest high-tech appliances, you choose simple models that last. In the same way, when it comes to investing, this leads to choosing stable companies that deal in everyday items over flashy startups that aim for rapid growth. The principle of finding bargains is also important. For example, you may find unexpected bargains at thrift stores or outlets. A friend of mine is an expert at this, and was delighted to get a designer bag at a bargain price. The feeling of acquiring valuable items at a price lower than the market price is similar to Dhandho investment. Also, the idea of taking a gamble that you can afford to lose is useful when starting something new in life. For example, if you want to take a cooking class but are worried about the high cost of the course, one option is to start with a one-day trial class. This way you can try it out without any risk to see if it suits you. The essence of Dhandho is learning and growing by taking small risks. Furthermore, imitating successful examples is surprisingly easy to incorporate into our lives. For example, it is common to find a popular recipe on the internet and add your own arrangement. This is a choice that emphasizes certainty rather than insisting on being completely original. The same is true in business. Imitating successful cases and improving them leads to a low-risk start. As you can see from these specific examples, the Dhandho investment method is a method that can be adopted even if you do not have special talent or knowledge. Starting with small steps has the potential to greatly change your life and investments. By adopting this way of thinking, you will surely feel that, I can do this too. 4. The core of the Dhandho investment method, asymmetric opportunity. Now, let's take a deeper look at the core concept of the Dhandho investment method, asymmetric opportunity. Once you understand this, you will be able to calmly judge the risk and return in any situation and make wise choices. Simply put, an asymmetric opportunity is a situation in which there is a possibility of obtaining a large return with little risk. Let's consider a specific example. For example, let's say you are participating in a lottery at your neighborhood association. The participation fee is 100 yen, but if you win, you will receive a 10,000 yen meal voucher to a local high-end restaurant. If you fail, you only lose 100 yen. This is exactly what an asymmetric opportunity is. The risk is small, but the return is overwhelmingly large. If you apply this idea to investment, the Patel family's purchase of a motel, which Mohnish Pabrai often quotes, is a typical example. They bought the motel with a small down payment of only $5,000. If they fail, they only lose that down payment. But if they succeed, they can earn $15,000 in a year, achieving an astounding return of 400% of their original investment. Finding such deals is the key to the Dhandho investment method. In order to find asymmetric opportunities, it is important to always have an eye for minimizing risk. For example, when starting a new hobby, instead of buying expensive equipment and tools from the beginning, try using a rental service. This method allows you to check whether the hobby really suits you while reducing the risk of failure. In addition, it is important to be aware of probability and expected value in order to take advantage of asymmetry. This may sound a little difficult to understand, but it's easy to understand if you use an example from everyday life. For example, suppose a friend brings you two offers. One is a job where you are guaranteed to receive 1,000 yen, and the other is a job where you have a 50% chance of receiving 5,000 yen, but if you lose, you get nothing. If you calculate the expected value, the latter is 0.5 times 5,000 yen equals 2,500 yen. In other words, the latter is more advantageous in the long run. Asymmetric opportunities can be said to be the ability to identify such options with high expected value. Another example of asymmetry that Mohnish gives is arbitrage trading. This is a way to make a profit by taking advantage of price differences. For example, if a product sold for 100 yen at store A can be sold for 150 yen at store B, you can make a profit by purchasing it at store A and selling it at store B. This can be difficult to find in the world of investment, but it is surprisingly easy to apply in everyday life. Some people may have had a similar experience at a flea market or online auction. The ability to find asymmetric opportunities is honed by gaining experience. By adopting this way of thinking, your options will expand greatly and you will be able to take on challenges without fear of failure. Finally, let's summarize how to apply the Dhandho investment method to our daily lives and future goals. So far, we have talked about the appeal of the Dhandho investment method and how to put it into practice. In one word, this way of thinking can be described as the wisdom to grasp big dreams with small risks. The attitude of the Patel family, who accepts small risks while seizing asymmetric opportunities, gives us many hints for our daily lives and lives. For example, let's say you are about to take on a new job or project. At that time, you may be worried about, what if I fail? But with the Dhandho way of thinking, it is important to have the perspective of, what if it works? Let's look for ways to maximize the possible returns while thoroughly managing risks. The spirit of Dhandho also leads to finding opportunities that others overlook by making an effort. For example, thinking about ways to save money in your daily life or making time to learn new skills are also investments. When you realize that it will bring you big results in the long run, small everyday actions will feel very meaningful. What Rina feels is particularly important is to have peace of mind. Mohnish himself was able to free himself from pressure and pave the way to success by thinking that he could try again even if he failed. If we can reduce the risk a little and have a flexible mind when starting something new, we should be able to take on challenges more easily. And above all, what the Dhandho investment method tells us is that opportunities are everywhere. Try to use this spirit not only in investments, but also in every aspect of your daily life, work, hobbies, time with family, etc. Even if it's a small step, that step may eventually lead to big results. Finally, Rena would be very happy if this story could brighten your future even a little. The Book Summary Library channel will continue to accompany you every day, aiming to be the best book explanation library in Japan. Thank you very much for your hard work today. I'm sure there are wonderful opportunities waiting for you in the future. I'm rooting for you, so let's do our best together. I look forward to seeing you again in the next video or commentary. Until then, stay healthy and have a wonderful day.